Good morning, I'm Chad Justice, and welcome to Market Monday for February 2nd, 2026. Let's take a look at what happened in the markets last week. Last week gave us a much-needed breather from the fast-paced action that led off the year. At their January meeting, the Federal Reserve decided to hold the benchmark interest rate steady at 3.5% to 3.75%, with Chair Powell stating that the economy is standing on quote-unquote firm footing. And on Friday morning, President Trump announced that he had nominated Kevin Warsh to succeed Jerome Powell as chairman of the Federal Reserve. Following the Fed's interest rate decision on Wednesday, the S&P 500 reached a critical milestone, briefly trading above 7,000 for the first time before retreating to finishing the day roughly flat. As we progress through the earnings season, the S&P 500 is on pace for double-digit earnings growth for the fifth straight quarter. We saw some big wins and losses against major players last week. Meta, the parent company of Facebook and Instagram, got a massive boost after beating estimates and raising guidance on revenue as well as AI spending. And on the other hand, despite beating estimates and posting strong earnings growth, Microsoft had one of its worst trading days in years due to concerns around potential deceleration of its AI business. And earlier in the week, the battered healthcare sector took another blow after soft earnings and lowered guidance from embattled insurance giant United Healthcare Group, alongside surprise changes, or lack thereof, to Medicare. The Center for Medicare and Medicaid Services issued an advance notice on Tuesday, projecting government payments to Medicare Advantage plan providers to remain flat in 2027. Falling well short of the expected 4 to 6% increase. So what's the takeaway? The best way to insulate ourselves from volatile investment sentiment and policy surprises is by holding a diverse portfolio of assets rather than concentrating risk in a few stocks. Even with a well-diversified portfolio, fear, uncertainty, and doubt can still shake our resolve and cause us to lose sight of the big picture. Through social media, the news, or even our peers, we're constantly bombarded with information. Information that, while true, is often framed in a way that provokes negative emotions. When there are headlines that elicit fears of war with Iran, uncertainty about the government's budget, and doubt about the economy, we must stick to what we know. We're investors. We accept the short-term volatility and stick to our plans that are measured in years, if not decades. History has proven time and time again that staying invested, even when the outlook is bleak, is a winning strategy. As the old saying goes, time in the market beats timing the market. That's all we have for you today, and as always, thank you for watching this week's edition of Market Monday. We'll look forward to seeing you next week.